It has been 2.5 years since Russia initiated its full-scale invasion of Ukraine, including the annexation of Crimea in March 2014. Russia has violated Ukrainian sovereignty for over 10 years. Led by the United States, Western countries have imposed numerous sanctions on Russia in an attempt to hinder its military operations by weakening its economy. However, from today's perspective, it's difficult to say that this plan has been successful. Hi everyone, welcome back to my channel. This is Demi. This time, let's take a close look at Russia's economy during wartime. Since 2014, when Russia annexed Crimea, the United States and its allies have imposed a series of tough sanctions to curb Russia's aggressive actions. These measures ramped up significantly in 2022 with Russia's full-scale invasion of Ukraine. So, what exactly do these sanctions involve? First, financial sanctions. Major Russian banks like Sberbank and the VTB have been cut off from the international financial system, making it really hard for them to do business in foreign currencies. They are also banned from the SWIFT payment system, which cripples their ability to handle international transactions. Next, export controls. Restrictions have been placed on sending critical technologies to Russia, especially in areas like semiconductors, telecommunications, and aerospace. This is designed to slow down Russia's technological and military advancement. Then there are energy sanctions. The West has banned new investments in Russia oil and gas projects, restricted exports of energy-related equipment, and prohibited certain energy imports from Russia. The goal here is to cut down Russia's revenue from its energy export, which funds a large part of its government and the military. Lastly, secondary sanctions threaten on non-US entities with penalties if they do business with sanctioned Russian individuals and companies, expanding the sanctions reach and increasing Russia's economic isolation. The idea behind all these measures is to squeeze Russia's economy, reduce its government revenue, and slow its technological progress. By doing so, the sanctions aim to weaken Russia's ability to sustain its military operations and push the government towards peace negotiations. Despite the sanctions appearing severe, their impact on Russia's economy has been surprisingly limited. In 2022, while the World Bank predicted an 11.2% GDP shrinkage, Russia's economy only contracted by 1.2%. Then in 2023, Russia bounced back with a positive GDP growth of 3.6%, defying expectations again. Looking ahead, forecasts suggest nearly 3% growth in 2024, with domestic life largely returning to normal. So, why haven't the sanctions worked as expected? First, Russia's central bank took aggressive action by raising interest rates to 20%, incentivizing people to hold on to their rubles and stabilizing the currency. Second, Russia banned foreign investors from selling securities, preventing a mass exodus of capital and helping maintain asset values. But perhaps most importantly, Russia has continued to rake in substantial revenue from energy exports. The spike in global energy prices following the invasion of Ukraine has played into Russia's hand. For instance, major oil benchmarks were trading above 110 a barrel in March 2022. Even as of June 2024, Russia is projecting a 50% year-on-year revenue growth from oil and gas. Moreover, due to the stimulation of the war, Russia's government has increased its military spending, including soldier wages, ammunition, tanks, and other war-related materials. Ironically, this has helped create lots of job opportunities, contributing to positive economic growth. Because of this economic growth, Putin has been able to impose windfall taxes on big companies, collecting more money to fund his invasion efforts. Unfortunately, this is not good news for Ukraine, as they do not benefit from such war dividends while the conflict ravages their land. So, while the sanctions were intended to cripple Russia's economy, a combination of swift domestic policies, continued energy income, and increased military spending has allowed the country to mitigate their effects significantly. Let's not forget, Russia also has some friends supporting it, at least for now. Countries like China and India are the biggest customers of Russia's oil. China has purchased 48% of Russia's crude exports, followed by India with 35%. Shamefully, Europe was also the largest importer of Russia's gas, accounting for 49% of the total volume, with China taking second place at 20% and Japan third at 18%. It's really frustrating to know that no sanctions were imposed on Russia's gas exports before June 2024. It's also very obvious that China is the biggest shadow agent helping Russia circumvent economic sanctions, including those on oil and tech products. We all know that Xi Jinping declared China and Russia had forged a friendship with no limits. Now, Russia has enough money to fund the war and even hire infantry from its new defense ally, Kim Jong-un of North Korea. It is reported that North Korea may send troops to Ukraine in July 2024. We have to ask the question, why do dictators seem more powerful and united than democratic countries? While Russia receives aid from the markets and other authoritarian regimes, Ukraine struggles to convince its Western allies that they are the front lines defending the civilization of democracy. The help provided by the US and Europe seems far less than enough for Ukraine compared to the support Russia receives from its friends. We may have to admit that the world is not moving towards a better place with this current momentum. We do hope Ukraine can secure its land and defend itself from the Russian invaders. It is crucial for humanity to demonstrate that democracy is stronger than dictatorial war criminals. If we lost Ukraine to Putin, it's not hard to imagine similar tragedies occurring in other places in the near future. As always, your ideas and comments are very welcome. Please share your thoughts below. If you like this video, give it a like and subscribe to the channel. See you next time.